All right, good day, good day. It's Sunday, September 11th. We're going to do a quick top-down analysis. Market has definitely developed in some favorable and unfavorable way to our last analysis, but just some things that we should be looking at to look at some possible developments in the market for the week. So it's important for us to take a look at so that we can figure out what our game plan is for the week. I did really good on gold last week, made over 4.7% return. Looking to continue to look for great gold opportunity as the dollar get weak. So let's take a look at this week's fundamental analysis as we always begin before we get into the technicals. Okay, so first of all, make sure you guys can definitely hear me. Whoever's on the call, I think we have a couple of people. So let me go ahead and get started here. So today, nothing happening on Sunday, of course, not much always happening. So Monday, we do have the GDP for month-on-month data start in London session. So other than that, look like nothing else is happening for the remainder of the day. Monday's going to be kind of a slow day. And then Tuesday, not a lot of red folder. We do have a key folder news here, which is going to be huge, right? So, this year it's really been about the year of inflation, just an inflation that, less about unemployment as it was last year due to COVID situation. So when we hear CPI data, which is going to be a major news because this is the report for Consumer Price Index, which is the measurement of price in relation to inflation. So we definitely had some red folder here, or red numbers last month, which shows that, inflation is looking to be flat. And hopefully this number will continue to be red. If this number continues to be red, then that means what CPI data is actually going down, which is exactly what the Fed just intend to do, is to bring down the inflation or level out the inflation, which is the increase, the repetitive increase of interest rate and the announcement. So we'll see what happens. I will expect the CPI data to be red or flat, or worse than, I would say, continue to be red or continue to fall, which is great for the market and bad for the dollar. Okay, so just keep in mind of that when understanding CPI news and understanding what that means. I talk about that in my coaching program. I also talk about in my coaching videos what CPI is and what it means. It's very, very important how it can impact the US dollar, especially if you're trading, Forex. Okay, so Wednesday, we have GBP CPI data that's going to come in. Obviously, that's going to have an impact on the pound. And then we have the PPI data, which is producer price index, which is following the manufacturing. And that number was red as well. That's good for the market in terms of the indices and stock market, but bad for the dollar in terms of weakening the dollar. So if these numbers come in on Tuesday and Wednesday, which I'm expecting, then we are going to continue to see the dollar fall according to the technicals. And we'll take a look at the chart in a minute. And then we got NCD, GDP, quarter on quarter, and Australia employment change. So on Wednesday, it looked like a lot of news, which typically happens on Tuesday, Wednesday, and Thursday, as always, every week. This is where key important news gets released. So we will expect to see maybe possibly continuation of the dollar weakness, which is great, and great for oil and great for indices, but bad for the dollar. Of course, it's important to understand the relationship to that, depending on the base and quote currency for the dollar crosses. Okay, moving on to Thursday, after we pass, we're going to have some impact on NCD, GDP quarter on quarter, and then red folder. Both of these would have a significant impact on those currencies and currency crosses. So it'd be look to know what is going on with these two currencies. Would be around this time, expect to see some high volatility across those pairs with the NCD cross, NCD CAD, NCD JPY, odd CAD, odd JPY, of course, GBP NCD, odd NCD, Euro NCD, and so forth. Okay. So Thursday, we're going to have the Empire State Index. I don't think this is going to have significant impact, but it will move the currencies and, of course, dollar. And, of course, I forgot crypto. So Bitcoin is also being in this game when it comes to relations to the dollar and the U.S. stock market or the indices market. And then we'll finish off the week with preliminary consumer sentiment, which really doesn't have a significant impact. It may cause some volatility, but nothing major. But other than that, it looks like there's no central bank news for this week, but we do have some key CPI data that is just as volatile, and it's just as impactful as the any other major central bank news. Pound would definitely be a mover this week in terms of what's really going on, as I'm seeing some GDPs and CPI data for pound, and of course CD and odd. Now, next week is going to be very, very pivotal, and also important because there is some central bank news getting ready to be released. So first of all, would be the Fed. So of course the U.S. Fed. And we're going to have the Fed make an announcement on Wednesday, and then on following Thursday, we're going to have the pound and also the Bank of Japan make their announcements. So these right here, Wednesday and Thursday, within a 24-hour period, will be significant. FOMC, the FOMC, which is the Fed Central Bank, and then we're going to have Japan policy, and then of course the French conference. We got Swiss francs going to make their announcement for the central banks, and then we have pound. So basically, these four currency will make some significant movements in the market next week. So we got one with USD, we got two with JPY, and then we got three for Swiss francs. And then, of course, the fourth currency will be GBP. Okay, so USD, JPY, Swiss franc, GBP. These four currencies within the 24-hour period is going to shake the market, right? So this week is almost like a setup for next week. And depending on the market reaction for next week, it could cause a significant continuation or a significant correction. You never know what's going to be, and we got to be ready for either way when we're looking at the technicals to be able to determine how we're going to trade and which way to trade the currency. Okay, so that's going to be very, 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 very important when for next week, depending on what's going to happen for this week as we play it into the market. All right, so that's for next week, and we'll talk about that later on. Going back to the Fed news, and we will look at this again when we're looking at, say, for instance, the Fed. It's important to know what is the probability of the price index of the interest rate that is going to be changed. For instance, right now, we're looking at a 75 basis point from where it's at now, right? So we have the dollar right here. If you're looking down, this is the worldwide central bank news, as we got the dollar, we got Swiss francs, we got GBP, and then of course we got Japan, and then we got Canada, right, and Australia and New Zealand. So these are all the central banks news, or not central bank news, but central bank current interest rate that makes a significant difference in the currency or makes a significant impact on the currency. It's important to be aware of this, and this is cbrates.com. It's a very good resource to have to follow the currency, and you can see where some of these currencies, such as the JPY, is in negative interest rate, and Swiss francs is currently in a negative interest rate, which is bad for the currency. You want the currency to be increasing, which makes the currency attractive and strong. The Japanese currency, for instance, had been in negative interest rate for damn near a whole year and have not increased the interest rate, which is horrible and making the currency weak, which is causing the currency to continue to, be weak against all the other crosses. So it's important that when we're looking at the currency rate, that we understand how these impact the currency. So Japanese currency for next week is something we're definitely going to be looking at to see how that impacts the currency, so we can look for that correction. And then of course the Fed, and then we got the pound for next, not this week, but the week after, which is the week of the 20, let me see here, the week of the 18th. Not this week, but the week after, which is 4 major currencies going to be having an interest rate announcement along with Swiss francs, of course. So 1, 2, 3, 4 Swiss francs, JPY, GBP, and USD. But coming back to USD, so right now we're at 2.25, and then looking at the probability of the interest rate increase, it kind of, this right here, the cmegroup.com, it provides a kind of a probability of what the market expects the currency. The higher the number, what that means is the percentage of what the market believes is going to happen. And when that number is pretty high, you can kind of expect that the market is pretty much expecting that to happen. And the higher the number, meaning the more higher probability that the market is pretty much priced in and expecting that currency. And if anything different changes from what the expectation is on a high percentage, will have, excuse me, will also have an impact on that currency as well. So right now we're at a 91% probability that the market believes that there's going to be a interest rate increase from 2.5 to 3 to 3.25, right, for September 21st, which is in 2 weeks. And then in November, there's an 81% probability that is going to go up to 3.5, 3.75, which is about another 50 basis point. And then in December, right now, it looks like there's only a 0.25 probability, 70.9%, which is not that great, but they're saying that it's a 70.9% probability that the market believes that the US dollar is going to be increasing rate by December to 3.75 to 4.0. So in other words, the Fed's overall in the summary is looking to continue to increase the interest rate. And November, it's going to be a 0.25, but definitely next week, there's definitely going to be a big one. They are going to increase interest rate. However, as we talked about this week, the CPI data will have a significant impact. If the CPI data is showing that inflation is kind of tapering off, or it has slowed down, or it is going down, which is great for the economy, of course. So therefore, the economy will be hawkish or bullish, and therefore indices such as S&P 500, US 30, and the stock market, so forth, would be bullish, and therefore the dollar would be weaker. And of course, to cross the US dollar, we can look to take some trading opportunity based on that weakness. And so let's take a look on the technicals and see what that means so that you guys can basically understand. So let's go to the handy dandy dollar, and hopefully you guys can see my screen here. Let me see if I can make this a little bit bigger so you guys can get a bigger snapshot, a full screen. So this is the US dollar, and let me zoom in a little bit so you can see how this played out. Okay, so this is the daily candlestick, and this is each candle represents $1 a day, and you can see where it reached as high as 110 on the dollar, and then literally broke down to this key level right here, 109, and broke that structure down to 109.334. So what do I mean by the structure? You know, if you guys understand market structure, this is a swing high, swing low, a swing high, meaning this is higher high, and you got the higher low, and then you got the higher high because it did go higher high. So then we come back down and we break this structure, which is significant, okay? Because if this is telling us that we actually created a higher low, and we are looking for, is this is going to be a higher, and I'm sorry, a lower low. And I'm sorry about that. Let me correct that. So we got a lower low, higher low, sorry, higher low. And here we have a higher low right now, but could this be a lower high market structure? Because when this changed from, higher high to a lower high, that means it did not go higher than the previous high. And if we only have a lower high, then we can expect most likely that we could be looking at a lower low, right? If that happens, we have a change of correct directions or change of character, and therefore we are going from a uptrend possibly down to a downtrend, right? That's looking at the dollar from a market structure standpoint. So looking at key levels, and let me bring it up here, right? So there is a key level here at price 103, just looking at the daily candlestick pattern. So 103 from a market structure standpoint. And you can see there's equal highs here, which was broken, right? And looking at the weekly, you can tell we definitely hit a key area of 103, right? Which was a high probability it was going to hit. Now we're at a very key supply level here, which is right here with these pockets, right? This is a very key supply level, meaning this is an area where you would want to sell. I don't buy the highs, we don't sell the lows, especially when we're at a historical level since 2002. So 22 years ago, this is where we were at. Now, could this go up and go to a even higher high to possibly, let's say 113, 115 area into a dangerous area of 120? Anything is possible in the market. The probability here is, for me, is very, very low. So this is a very high probability we may be reaching a high. Of course, the fundamentals will need to support that, which means we need to see a tapering of the CPI data. And of course, we would need to see the reactions of the Feds where they increase interest rate. And if the price does not increase the dollar strength to push this back up, then we could potentially be seeing, if this doesn't happen because the interest rate and we see more of an equal high, then we could potentially see this, especially if the CPI data is down. If we get a negative down, then we're definitely going to see some dollar weakness. And then, of course, if the interest rate does not make a big impact, as it's already priced into, because the interest rate is already saying that it's not going to make a bigger difference on the CPI data because the CPI of the inflation of the US is still going down, then the dollar will continue to see the weakness, which is great news for those who are shorting the dollar. And it's bad news if you're thinking that it's going to be bullish, okay? So looking at structure here, this is going to be the main key here when we're looking at this particular pair, what we're expecting to see. So right now, going back to the daily chart, this is what I'm expecting. So this is what I'm expecting from the dollar. And I'm looking for this break right here. This break of trend right here, which is a very key trend, but I'm looking for the dollar to come down into this order block area here, possibly come up, maybe retest this, and then come back down to this level, okay? So that's what I'm looking to see with the inflation data coming up this week to continue to push the dollar. Maybe the inflation rate, maybe may spike it up, who knows? And then continue to see the correction of the dollar, okay? There's so much going on with the dollar. We're talking about an 18-month bull run on the dollar. So this year has been unprecedented in a lot of the forex pairs in relation to the normal ebb and flow and the normal market. I would say the equilibrium of the market from creating nice swings and nice swing highs and nice swing lows. We've been seeing more extreme highs and highs, or more extreme lows and lows and lows at historical level, breaking beyond, I would say any type of Fibonacci sequence numbers and supports and resistance, and very strong support and resistance. And we're seeing more historical record highs and historical record lows that hasn't been hit since 20 to 25 years, or 10 to 25 years. That is significant when you have that type of market. And therefore, the more we're in extreme level, the more propensity or the more momentum we are going to see that correction even happening even more. So when that happens, you definitely want to be on the opposite side of this, but with confirmation. If you're playing conservative, if not, you may want to go ahead and put some pending sell orders for if you're shorting the dollar. You want to make some, pending orders and buys for USD crosses or sells, depending on what you're doing. Okay. So here I am expecting the dollar to, not break this, come up. If it does, I don't see it coming up. It all depends on what happens fundamentally, but this is what I am expecting. I am bearish on the dollar, and therefore it's going to cause me to make some prediction and some position on the dollar crosses on what I'm seeing across the dollar. Okay. So before we go to the dollar crosses, let me go ahead and look up the S&P 500. I'll pull up the S&P 500 to kind of look and see, okay, in relation to the dollar, what is the correlated, to the stock market? Obviously, as you guys already know, the stock market is inverse correlated to the dollar. So if the dollar is weak, we expect the stock market, which is S&P 500, the Dow Jones 30, and NASDAQ, to be the opposite direction, to be bullish if the US dollar is bearish. And that also goes along with gold, as we expect gold to be also bullish in relation or inverse correlation to the dollar, and also along with BTC. So indices, BTC and gold will always be inverse correlated to the dollar. Now, as you can see, we did have this big push up to the bull side, and then we came down and we kind of retest this order block level here. Obviously, this is the low back here of 36.32. This is S&P 500 on a daily time frame. This is the low. Right now, we had that nice little pullback, which is a great bull run. And now we're going to need to see what happens from the market from here, right? Are we going to be able to see the market pull up, maybe retest, and then come back with a bull run? Or is this maybe to the upside here, and now we're going to be coming back to retest the lower lows, or back to COVID low? Right now, it's unforeseen. I am going to err on the side that I am bullish. I am going to expect the dollar weakness. Of course, if I'm bearish, that means I'm bullish on the stock market. So I do expect this to be on the upside. But if the dollar continues to be strong for whatever unforeseen reason, I don't see that happening, then there is a high probability if we break. So in other words, it all depends. If we see this break here, then we are definitely going to be seeing this level. And then who knows, we may be seeing this later on. But if this does not come back and break this, then we could be seeing a possible bull run. And I would say if it breaks this level, we are definitely going. Okay. And we're going to go back to the historical highs of the market, which we're looking for if the interest rate does not make an impact, and if we see in CPI data not making any new highs or record high or high numbers, and the CPI data is going down, which tells us inflation is going down and it's tapering off, which is the intent of the Feds in the first place. Okay, so let's take a look at gold, and we can see that play out as well. So looking at gold real quick, this is on a daily. And you can see here, these are historical lows here. This is the demand level. This is 1677 price. This is back in June 2020, so 22 years ago, right? 2020, 22 years ago. And this, we haven't broken this levels and been below price 1677 for gold since that level. Now, the dollar would have to be that damn strong for gold to go as low as my next level here down to $1,500. And I don't see that happening for gold. Gold, that means gold would be very, very cheap. It'd be a good time to go buy jewelry, go buy earring, go buy your wife or your spouse or your significant other some really good gold jewelry, or pick up yourself some good gold jewelry because it'd be very, very cheap to buy it then. So the value of gold would definitely be down low enough to get some good piece of jewelry for gold. And that would be some historical level down since March 2020. I don't see that happening. And in the market, I was able to take some opportunities to where I saw this come down and I took a buy and I did some trades here. Took a market, I think I did one sell opportunity, but other than that, it's definitely been looking bullish, and I will continue this bull trend for the simple fact that we have some very strong support level, and I am expecting the dollar to be weak. So when that happens, obviously with an inverse correlation, that means I would expect to see, bullish price come back up to $1,800, and this will continue if and only if the CPI data is worse than forecast, which means inflation is tapering off or going down, and the Fed's rate next week does not make a significant difference because it's already priced in, and with inflation going down, no one's really excited about the dollar. Therefore, let's put money in gold, okay? So that's what I'm expecting for. I'll be looking for a trading opportunity to trade gold. A great gold breakout would be price 1724, and the lower of this breakout range would be 1700. If this breaks, then we can potentially see 1675 and lower. If this does not break and would look like we get a break of 1723, my next target for gold would be then 1758. So if you were to trade a breakout and put a buy stop here at 1723 or whatever close to your broker number, and put a TP here at 1758, that's what I would do. I am looking for the upside, especially when I'm seeing some bearish pattern on the dollar. So we'll see how that plays out. Okay, moving on to the other, let me just go ahead and go to the other inverse correlated pair, which is BTC, okay? So with this one, I see this is a very historical level for Bitcoin, for those who like to trade Bitcoin or following Bitcoin, or if you're holding Bitcoin, you're wondering, hey, when should I sell? When should I buy more? And so forth like this. This is going to help you make that decision. Right now, we're at 19,828. Well, that was the low since 20, another record low since 2020, so 22 years ago. And what we saw was we saw this rejection here, and that's when I made my marker here, and I said, okay, listen, if Bitcoin continue to reject this area, let's buy the darn thing. And when it broke this channel and it came back down to this area, I said, hey, if it breaks this is going down to this level. We're going to see 1,700. If it breaks that, we're going to see 1,400. But it did not break this zone area of 18,572 last week. And then when we saw the dollar weak, we saw gold spike, we saw the bullish spike, therefore Bitcoin spike. And right now we're currently at 21,287. So with that being said, sorry about that. So with that being said, are we seeing the possibility of the end of Bitcoin bear run? And are we all going to see this bull rally, bear run, and we're going to see this bull rally? And I would say that I would caution to traded short and maybe looking for opportunity to trade high. And this is what I'm banking on, right? I'm banking on Bitcoin to definitely hit this area of 30,000. I'm calling it already, and I know it's going to come there. It's going to come there eventually. It's going to come back, and it's definitely going to come up here to $39,000, $40,000 in the future, right? So within the next 7 months, hopefully, probably by Christmas, I can see it coming in here, even come as high as 40 grand, right? But before we do that, we're going to have to break and cover this gap. We're going to have to come back. I believe we're going to see $25,000. We may be able to see it this week. If we see the dollar continue to be weak and the indices market continue to be strong, then we will see BTC bullish continue this bull run, maybe pull back a little bit and then hit towards 25,000. We're not far off. We're only at 21. So just a little bit, few more $1,000. I definitely see that 25,000. We break that $25,000 by this week or end of next week, this is definitely going, okay? So if you were to be a holder of crypto, hold. If you're looking to be a trader of crypto, this is a good time to buy. I wouldn't buy here at 25. This is a good place to buy and put a stop loss right there and say, hey, let's go. Or you can wait for a little small pullback. I don't think it's going to be a lot of small pullback. It could be. You could wait to possibly 20,000 and put a pending buy there, or you can even buy now, like I said, and put a stop loss there if you're scalping it and just hold to 25. I do not believe if this breaks this level right here of, I would say, even as 22, we see this break up here, let's say 22.5. We see that break, we're going up, and the likelihood of that coming down is very, very low. And if we break 25, we are definitely going to see 30,000, okay? And that is for Bitcoin. Okay, let's go to the dollar crosses, start with Euro USD. Okay, so with Euro USD, and let me go ahead and clear some markings here. With Euro USD here, we are seeing a little bit of some support here that is having a hard time breaking that area, which is good, right? So this is that dollar parity, which was right here for Euro USD. And we're finally starting to see the equal high. This is on a daily time frame. Right? We're starting to see that return or equal high of $1.07, right? So 1007. And we're right now back at, we're at 1004. So, and we went as high as 1.01. Wow, this is really, really good. It's a really good sign. But the trend line here is the key part right here. This is that key part of that trend line that we would need to see at the break to really confirm that we're on the other side if you like to trade trend line, okay? Now, from a market structure standpoint, we definitely need to see a break of 103, and we need to see a 107. But once we see this break, we're definitely going to be seeing a nice break on the upside, and I am earning on the upside of the Euro USD. I'm looking for this touch right here. I'm looking for that touch here, this break of structure, and this is what I want to see. And I do believe we're going to get there. You got to think about it, right? So Euro USD, let's look at this. Euro USD has been on this horrible trend to the downside since June 2021. 21, not June 2022, 21. So we're already over 14 months overdue on this huge downtrend of Euro USD that is historically at a record low. Look at that. This is the ceiling of the market. This is the floor of the market. And this is not where you would want to sell after a 14 months downtrend. Very, very much unprecedented from an extreme level. Everything is pointing at a bullish momentum and a huge correction, especially when you see multiple rejections like this, okay? The longer this hold and the more we're going to see a potential upside. So the probability if you were to choose between buying and selling, I would be on the side as a reversion trader, meaning I like to trade on the momentum, opposite side of the momentum. So if the momentum is to the downside and continue, it's not going to continue down and down and down. It's not going to happen, especially when I'm seeing divergence, I'm seeing exhaustions here. You know, this is where the market is telling you that it is basically way, way oversold and it's undervalued. So I am looking for, you know, the Euro USD to hit 103. And once I see that, I'll be buying into the correction here, or you can buy now and put a stop loss there. This is a good time to still get into a buy. Buy the high. Don't buy when it gets up here. You missed this, then fine. Watch it go up here and then play the correction, or put a buy stop right above here, right? In terms of market structure on the daily time frame. Right here, you can play the 1.1007 game, buy stop there, 1.007, and put a buy stop order there. And price goes up, it'll take that order and it'll take it up to 103, and then you can hit, you know, TP there and close for a trade. Let it pull back into this area, even possibly this area, and get into another buy. That is going to happen, whether it happens now or whether it happens later. I am definitely erring on the side of bullish for Euro USD. Now, that's the same thing for the other crosses that has the USD on the right-hand side of the pair as a quote currency. So that means, yes, I am bullish pound USD. I am bullish NCD USD, same difference here, and I am definitely bullish on odd USD, okay? You can see how this has come down on odd USD, equal lows, come up to a market structure on a daily. This could pull back, but I'm definitely looking for 0.71 on odd USD, for NCD USD. It came back past a little bit up here for some liquidity grab here, and I am erring on the caution for NCD USD to get into 0.62 pricing. And definitely, we are definitely going to see 0.64 in the next few weeks as NCD continues to strengthen towards the upside, okay? And then, of course, GBP USD, I'm looking, when you look at the monthly chart like this, and this is a monthly chart, look at that. This is a monthly. This is the high back in 2007. This is the low where we're at. We've been here in 2016. We were here in 2020, 22 years later, here we go. I do not see us breaking this strong area of support. And if you tell me it's going to break there and it's going to keep going, it's a possibility. What is the probability? Is a high, medium, low? I think it's a very, very low probability this is going to break on extreme level, especially when I'm seeing extreme exhaustion just like this. I saw it here, we saw it here, and what happened when we saw it that low? It broke up, it broke up. Are we there yet? You make that decision based on what we see in technical, and you see which way you would want to trade this. You would trade this short, or do you trade it long? Okay, and if you understand the probability of trading, you would want to trade it on the upside. Okay, and if not, you can go ahead and try to scalp it low, try to play that game, take a gamble, and see what happens. I don't think that would be a smart idea, but that's definitely something you can test and see for yourself if you want to trade at. I'm looking for, you know, in the future here, 1.22. Obviously, we need to see a break of 117, and this is what I'm seeing for myself, and this is how I'm trading it. I will be buying, and I will be looking for this, because this is long overdue, especially we see a break of that trend line, which is another game you can play here as a strategy, and say, you know what, I am not looking to buy until I see a break of that trend line. And if you want to, that's the price of about, I would say 1.19, which is a very good conservative number based on this trend line break here. I think I'm trying to draw a nice little trend line here for you. This is on a daily. So when you see that, you can be aggressive and trade it here and be a reversion trader, or you can go ahead and trade a breakout and say, you know what, I'm gonna wait till I see a break of 1.189, or you can even be ultra conservative and wait till it hits about 1.2, wait for a pullback, and then trade that as well. There's so many ways you can enter this trade, depending on your risk appetite and depending on your confidence on how you can trade this. These are multiple ways of trading for pound USD. Pound USD, Euro USD, NCD USD, odd USD, I am all bullish. Now let's look at USD on the base side of the currency, which is the left-hand side of the currency pair. So let's look at USD JPY. As you can see, yes, I know it's horribly scary, right? Especially when you see what? This is monthly. Yes, this is like historical high. Let me see if I can get the Saxo Bank. Oh, there you go. So this is the extreme high of the market, right? This is the kind of like what I call the ultimate ceiling of the market and the ultimate floor of the market here, okay? We're closer to the floor of the market, we're closer to the ceiling of the market. All right, so let's look at it a little bit closer. I'm looking at the monthly market right now. So each one of these candlesticks is a month. So this was right here back in 1986. Not sure if some of you guys have been born here, but for those who've been older, obviously, this was a very, very, very long time. So this high right here was 1990. This high, historical high, these are historical highs. So anytime it goes peak like this and it goes down, that's an historical high. Very definitely, very critical marker. And this is looking at the USD JPY on a monthly. So again, 1990, this is 1998, this is 2002. Well, if you look at this chart here, it's very clear we definitely broke that high of 2002, 20 years ago. We are now approaching the high of 1998. Now, there was a gap in this particular area here. We definitely fulfilled that gap, and we definitely fulfilled this gap. And we're basically within a range, right? You can't just say, well, it hasn't really hit the area of, 1998, but we don't need to be. It just need to be in that range. Right? Nothing needs to be exact to the T, but hell, it's not pretty damn close. We're more than 50%. If you look at it, this is 50% of that particular high of 1998 of 140, let's see, 147. It went as high as 145. Did you need to be at 147? No, you just need to be in the supply area. So this is a good area of where you would want to what? Buy? You would want to buy that? Well, I can understand because we've been in this run since January 2021. Look at that bull run since January 2021. Horrible, isn't it? So we're talking about over a year and a half, like 18, 19 months. Yeah, that's very, very significant. But if you understand price actions, you've been trading very long, and if you've been to my course, you understand that we do not buy extreme highs. No, we don't. Especially when we're seeing close to key levels, record levels. This was a high probability. This was a this was a medium probability of reaching, and this is a low probability, right? So my coaching students understand that when we're at extreme level, we're looking for opportunities to be shortened, right? You got to look, okay, wait, this is extreme low, this is extreme low, right? And or overbought, and it went up, and this went way up, right? Now, when it went high like that, what did it do? It went down. Are we there yet? Are we way in overbought condition? Just like we were here. Just like we were here. And just like we were here. So the question you need to ask yourself, looking at the technical as I explain it for you, are we there yet? Or do you take the gamble and keep going? I don't know. Me, like I said, I'm erring on the cautions of high probability. When we're trading, we're looking for high probability setup, not what we think, not what we feel, but based on what we see. Yes, this is looking to fall and fall hard, right? So let me go ahead and put, this is my Fibonacci level here. And this is what we trade in the premium and discount. We do not buy when it's in premium. This is the premium zone. This is the discount zone, right? And we also know, and I also teach my coaching students that when we see price that's in a 90 to a 70-degree angle, as we see right now on the monthly, on the weekly, and the daily, with all types of divergence, lighting up on a weekly, daily, and telling you, what do you do? We are looking for a 50% snapback right to this particular level. And this is the 50% on the fib. And lo and behold, what do we see? Wow, how is that significant right there? We got some key levels that are hidden and they're looking pretty good right there. But price action should be significantly attracted to that area of 2007 and that high of 2015. Yes, I do believe price is going to fall back 100 to 123.97, which is a nice 2014 pip drop. Are we all going to see there in one big shot? Of course not. It's not going to happen. That's not how the market works. And if it was, it'd be too easy and everybody would be doing it. Okay. So we have to be aware of how that market is going to be reacting based on what the dollar, of course, if the dollar continue weakness, like I said, believe the dollar is going to be weak. And if I do believe the dollar is going to be weak, let's go to the daily time frame. We are looking for this particular let's see, trend line break there to be extra confirmed. We do have a market structure right here that needs to be respected and to break to confirm a price change of character. This is extreme higher high. We did close at a nice bullish candlestick close here. You can see that red candle. If you look closely, you can see a very nice bullish candle. We did reach the high of 144. We did not go to the historical high of 147, but we're in the supply zone. And when you're in supply zone, you do not want to buy in supply zone, right? We want to see a nice pullback. And this is it right here. We see a break of this, we are going to be going down, and we're going to be going down to our historical level price here. 50% is what we're looking at. But if we do not see that, and we do not see a break of this level, especially this level here, we could be seeing a range. That's another possibility. But if we do not break this and price comes back, which I don't think is going to break that level, but if we do break that historical high, which is a low probability in my professional opinion, then we are going to be seeing 146 and beyond, okay? I hate to see it. It'd be horrible to see it. However, I doubt it, and I'm still looking. You can trade this at the break of 138 if you're concerned. If you don't trust my analysis, which I don't expect, I'm not trying to convince you. I'm just telling you what I'm doing and what I'm seeing based on my experiences and years of trading and based on what I'm seeing in the technical and what I believe to understand from what's going on in the fundamentals. I do expect, hopefully, it'd be really, really surprising. And this is what I am going to say and put out there. If JPY increase interest rate by just, I don't care if they do it by 10 basis points next week and shock the world from all of this monetary easing that they've been taking for the last year and a half. If they shock the world with an interest rate or some type of very good, strong hawkish movement of comments in the announcement next week, we are definitely going to see this. And I am going to be looking to short this like it ain't no tomorrow. And I got to tell you, if you see the break of 138, you're definitely going to see 134. And if you see that break, let's go. Okay. That is USD JPY. Now let's go to the other base currency for USD Sept. As you can see, you just tell me based on what I'm just coaching you guys on. This is on the daily. You can see, looking at the technical from a price actions peak standpoint, looking at this peak, what do we saw here, and what did it do? Okay, what did we see, and what did it do? Are we there yet? Did it break? This obviously would have been a good time to sell it because it did go, right? It's right here. We're not here. Uh-oh, so what does that mean? Yes, I am definitely more shorting on your USD. I mean, on USD Sept, I am seeing more bears. We may see we may see a little bit of a pullback, possibly, maybe to this level here. With it could just to close its imbalance, and then come back down right here. Okay, this is what I'm seeing. Price 2.94 on bearish on USD Sept, and the last base currency for USD is this one right here, which is our infamous USD CAD. Right. Let me pull some trend line here so that you guys can see some price action standpoint. Okay, so the reason why I'm drawing this is because I'm looking for short term and long term. Just the outer trend line is long term right here, and this is an inner trend line break. And as you can see from a market structure standpoint, an exhaustion standpoint, you can see we were overbought in this conditions, which equally made this high of 1.32. We saw the market last week make a nice bearish turn, and we are far from over. Okay, so we could see a little bit pullback. We could see that. However, I don't think that's going to happen. If we see USD continue to be weak, CAD is going to pound the dollar all the way past 1.22 as a key structure there. And if we see that, we can possibly see the bounce off of this trend line or all the way down to this daily order block. And I am definitely counting for this to happen around 125.5 in the near future. If we continue to see the dollar to be weakened, and we're going to see a break of that, you can definitely count on this price right here of 1.29 to 1.22. Okay, so that's USD CAD. All right, so let's move into the JPY arena. As I've already talked into the JPY, let's just look at Euro JPY. And again, I think you guys are probably starting to get the understanding of my market structure and how I'm coaching and how we trade at FX Prosperity here. When we're looking at all of the technical, this is an RMI indicator along with stochastics. And this is how, let me see, let me make sure that kind of lines up there. Okay, so you can see where anything above the zero line, and this would be considered the zero line here, which we teach our coaching students to understand the difference between the bearish sentiment, the bullish sentiments up here on the upside, on the other side of the 50 line or the zero line, and below that would be more of bearish sentiment. So anytime it's up here, you should be looking for market exhaustions, and you're looking for key candlestick confluence, candlestick patterns, market structure, order blocks, imbalances, and liquidity to look for sell opportunities, and vice versa when you're on this side to look for buying opportunities, especially you want to put some respect to Fibonacci's in terms of the premium and discount level to look for buys and sells opportunities and key levels. Okay. As you can see right here, real quick, it's very key simple to see. We're definitely exhausted points here. If you were to look at this based on what I just showed you, should you be looking for buys? You should be looking for sells. If you say sell, then you are definitely ready to take this trade. Now, let's look at a higher time frame on a monthly though. Okay, this is the extreme high of the market. This is the extreme low of the market. This is some historical levels here of 2014. Obviously, there is a very good strong key level. However, we are there from a supply standpoint. This is definitely a supply zone area. This is the historical key level of 2014 here, and this is way back in this right here is 2015. We are definitely in a very strong key supply area. That's on a monthly, right? And we're very exhausted. Exhausted on a monthly, we're exhausted on a weekly, and we are definitely exhausted on the daily, okay? So with that being said, I don't see us getting high as 149. I don't see that happening. There is a possibility. If we do see a break of 144, then we are definitely going to be looking towards target 150. If this continues to go down and it breaks this key structure right here, this is what I'm looking for in terms of the key structure. I like to see the break of that structure, and I like to see the break of this structure right here, right? These two structures right here. It breaks this, we're definitely going down to 138. So what is this? So if we break 141, we are definitely going to see 138. So I'm definitely erring on the caution that JPY will be picking up strength. And if that's the case, we are looking like this, right? Now, if Euro keep pushing up, JPY keeps getting weaker and weaker, and we see a rejection of this, and instead of coming back here, we actually come and break, then we are definitely going to be looking at that area. I'm banking on it here on saying that I'm bearish on Euro JPY, but if I was to be fair and say I'm neutral, that would make sense because I really like to see a break of 141 to be saying that we're going to be looking to be bearish and coming back down. I would think from the technical side standpoint, as from a high supply and an overbought conditions tells me that this is bearish and we should be looking for sales. Okay, let's get looking for pound JPY. Let me go ahead and erase some drawings here. Same difference, right? Euro and pound. And we can see we're overexhausted on the RMI and over and the stochastics. You see that we're looking at them very strong exhaustion points on the upside. We're very key here from this swing low to this swing high to 166, which is equally here. Could we see a potentially more to the upside of 168? That is possible, but if I was to say anything, I would be looking to sell. It came down, it would be a nice grade to put a pending sell here and another pending sell here at the dollar cost average. If not, I'm looking for price to come back down to 162. I do expect JPY to pick up strength against the pound. It'd be more about JPY strength versus pound weakness. Okay, let's get that Chef JPY. Chef JPY, look at the monthly. And this is the historical of, make sure if I get some really good data from Saxo Bank. So we can get some really good historical level. Okay. So we're back here. This is the extreme high of just a, I don't know what that is. That's just a candlestick, just wick, just went up in a single month and just smacked. I wonder if that's a week. Let's really look at that. Ooh, even that is a weekly candlestick. What am I daily? Yeah, that was a wick. That was definitely a wick. This is in a day. This is a day candle. Yep, just like that. That's all it was. Went up from here to here. just like that, in a single day. Can you imagine that? 413 pips going against you, just like that. Boom. In a single day. I don't know what happened. This was back in, let's see, 2015, January 2015. I have no clue in 2015. I wasn't even trading then. I didn't start trading until more like, 2016, 2017. So whatever happened on Chef JPY, and that just spiked up. That's incredible. Okay. So if you go back to the weekly, let's go to the weekly. Chef JPY, historical level. We're at a very extreme high, very extreme level, low. Obviously, playing the exhausting level, you're going to be very safe in the long run. It looks scary, of course, in the short term, but this is definitely Chef JPY. Again, even if it looks like it's pushing up, and it has been for, JPY this past week, we're looking for, again, not this week, but the week after, JPY will have the interest rate. If they shock the market with just a little bit of hint of interest rate change, it is going to shake JPY and everyone's going to get smoked. But again, I think and I believe that we are seeing the end of JPY for some historical moments of extreme level, especially if JPY, I will not ever buy the highs, especially if it's like this. I will hold it in a swing drawdown to get paid out in the future. And I rather not close it and be frustrated to see it drop 2-3 months later, knowing that I could have held it and just realized the break even. So going back to the daily, I don't think I need to say anything. I'm bearish. I'm looking for this break right here. Come back down to 142. You can wait till there if you want to see a break to short. That is 58. I'm talking about 58 pips to see if that's going to break down to that level. I don't know if you want to wait that long. I don't think it'd be smart. You can if you want to, but to me, I don't think we should be looking to take some good opportunities to sell that market. And let me pull up on my other chart here on Chef JPY real quick. On the daily. Yeah. So let's see, put it back over here. Let's see. Sorry about that. We're looking at 577 pips, not 57 pips. 500, I was thinking points here. 577 pips. I don't know if I want to wait 577 pips to take an opportunity to sell. Even if it goes up a little bit, I take it. I'll short this and take that risk to the downside for 577 pips just to this level. I believe we are going to definitely see more than that. So let me go to this swing level here, just on the Fibonacci level from this swing low to this 50% mark, which is a very good mark there. We're looking at now a potential of just to the 50% level, over 1,000 pips. Chef JPY, bring it on. Bring it on. All right. I've been holding Chef JPY. I would definitely, if you've been holding Chef JPY, just keep the faith. It is so much coming. And when it does, you're going to be so relieved when it does. It's scary as it now, the look right now, but it's going to be so much relieving. Same thing with CAD JPY. CAD JPY, I'm in this trade. It is a frustrating trade. I'm just as frustrated as anyone else, especially if you saw the break of past 2015 historical level, which I did not think it would even come close to even breaking that. CAD strength pushed it up. However, I don't see it going past 112. If you go to the daily, I think once it broke and got as high as 110, and if you look at a 4-hour time frame, it came back and it looked like it did about 120 pip drop correction. We may see the retest at that, but I am definitely looking, this is on a 4-hour time frame. So I'm definitely looking for a break of this or come back and retest that, which is what I want to see. This is at 107. Maybe come back here and come back down. Okay. So that's what I'm seeing on CAD JPY. I'm short JPY. Obviously, it looks like you can tell from a sentiment standpoint with JPY, I'm bearish on JPY. Anything with JPY, I'll be bullish on JPY in terms of a currency to be bearish on everything that's JPY quote dependent. So Sept JPY, Euro JPY, Pound JPY, CAD JPY, USD JPY, NCD JPY, same difference. RJPY, same difference. Okay, you're looking at NCD JPY, you're looking at market exhaustion, going to the daily, just to kind of give a very good key level. Let me put it up on a monthly. Want to buy up here? You want to sell? I'll be looking to sell. You just trade small and cost average this out. It will pay you out. It will pay you out. And that's key part. A lot of people are trading big. If you're not trading small and you're not cost averaging out, and knowing that just here, if it was a normal market condition, you would have been paid out a long time ago. But this is an unprecedented year. This is why trading small is it's a very good, safe way to trade when you're day trading. And that's just scalping, totally different strategy. If you're day trading, this is the way you want to trade so that when it does come to extreme market conditions, as we're seeing this year, you're able to weather the storm and stay in the trade. I'm still in these trades. I've been holding these trades for 3, 4, 5 months. That's okay. There's no record that says you can't hold a trade longer than 2 to 3 weeks. You can trade this trade and hold this trade and pay it out and break you even, because the market conditions have been unprecedentedly extreme. We're seeing 16 months trend. Obviously, I didn't get in this month 16 months ago, but we've seen 16 months trend just keep going, 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 and going. It's not going to go up or going down forever. Okay. So RJPY, same difference. I'm looking for a weakness on RJPY. Obviously, I had it here last week. I'm looking for this. If you go into the monthly, you can see it clearly here that we're seeing what? Are we there? I think so. We got this here. We got the extreme high, extreme high. What do you think? More than ever, this is the level where you definitely want to be considering short, all right? This is anything by here, you should be looking for extreme. Excuse me. So anything in this area is looking for buys. Yeah, but what if it, what's the intent? What if it breaks out? What if it goes, here? What if it goes here? What if it goes here? Yeah, if it goes here, 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 anything in this area, you would definitely want to be looking for buys, right? That's what you want to be looking for. This is how you will want to trade. You want to look for buys, anything in this area that's down here. Anything up here, you want to be looking for sells. Anything in here, then you would want to be following the ebb and flow of the market, and obviously be looking for opportunities based on how the market is moving on key Fibonacci levels, right? But other than that, that's what we're looking for when it comes to this particular currency pairs on our JPYs, okay? Definitely something to see, especially what we just talked about in the fundamentals earlier, about an hour and a half ago almost, when we talked about, since we've been on this call for almost an hour and a half, we're going to get ready to come to a close. We talked about the fundamentals, how the key bank rate news, 4 major bank rate news, not this week, but next week. And if you have missed it and you just came in, you're definitely going to watch the recording on that, on how those 4 bank rate currency news is going to transpire, most likely played out into what we're seeing in the technicals. Okay. All right. So I'm going to close this pair with a couple more. Pound, let me see here what I'm looking at. Going to the daily here. I'm looking for, this is great to see, as we saw this break right here on euro pound. I would definitely be bullish on pound, came back down. Euro pound is definitely there now. I would say this would be bearish. Look for a retest here of 0.85 before it comes back up. We're definitely going to come here, right, in terms of euro pound. But right now, I'd be looking to sell. Could it go a little bit higher? It could. It can go a little bit higher as far as even this level, right? So I don't want you to think, okay, just because we're way overbought, it's not going to keep going a little bit. It could push, right? We've seen it unprecedented, right? It could push, but I don't think it's going to go way that high. This is a very low probability, but I think we're at a very key supply level here to see a pullback correction to the upside. Okay, so for bearish on euro pound, long-term bullish. Okay, pound Sept. If you're trading pound Sept, let me pull up the monthly here. If you're trading anything related to the pound, right? Now, I know a lot of people are thinking, well, does the Queen of England, her death, does that have a significant impact to the currency? And I would say to a currency that's already down, no, it's not going to have. They're not going to just continue to pound the currency because the Queen's death. Obviously, the government and the currency is a lot more different than just depending on the Queen. And this, especially when you have an historical low on the pound. Okay, just keep in mind of that. We did not see a big dip or any significant drop on the announcement of the Queen's death last week. So that is good news for the currency. Just be aware that we did not see historical or any jolt of the currency of pound on the Queen's death, okay? With a bearish market already. So this is a daily, this is Thursday, this is Friday, and it went as low as 1.10 and then came back up, okay? So if you're looking at the pound, this is on a monthly, and if you were to put a trend line there, put a trend line, go to the daily. This is where we want to see a break. We want to see that trend line break to kind of help you from a, to help you stay on which side, or if you want to stay and, trade this conservatively, you can wait for the break and a cross of this market structure of 1.13, or you can go ahead and put a buy now and take an opportunity of 167 pips, which I believe we are definitely going to come up here. We're definitely going to come to this area, okay? And then we could be seeing a break here, and then we could see a break back up to that upside, okay? Now, that doesn't mean it's just going to continue up. We could be seeing this for a little bit. Pound Sept is definitely known to be ranging, so just be aware of that. But I do believe this range is the proper range is between 1.16 and 1.12, not this low here. Okay, that's pound Sept. Let's look at the other pound. Let's look at pound CAD. Going back to the monthly on pound CAD. Look at this. These are some very key low levels here, 1.51, 1.49 for pound CAD. And we have definitely hit that level of 1.49 and bounced up. This is on the monthly. We haven't been this historically low since 2010. 32 years ago? Yes. 32 years ago, pound CAD this low. Do you want to short a 32 low level pound CAD? A 32-year record low pound CAD. Do you want to take that low? I don't think so. I'm thinking, I think I want to stay safe and say, look, this is market is way oversold, and it's way oversold. Look at here, anything over here, and anything over there. Are we there? Or you want to continue to stay low? Now, I can tell you, a lot of inexperienced traders, investors, people who don't look at charts, people don't know what they're thinking about, people don't know what they're talking about, and all they see is just looking at their account balance and they're saying it's going in, draw down, draw down, draw down, and said, please stop. Okay, then you're not made to be trading. You have no business to be trading. Get out. Stay on the sideline, do some more training, do some more reading, do some more patient, and do some more chart time. Because if you're shorting this, I'd be concerned. I don't care if you were shorting it from up here and it kept going down. You did the right thing. The market is pushing and squeezing it. That's all. This is all liquidity, right? This is all liquidity area to take the market to the upside. This is what it's all about. Hey guys, so thank you for jumping on. I got on a little bit early, so apologize if you guys are jumping on. I do have this recording, so I'm almost done. So if you guys are just jumping on, you guys are catching the tail end of this, but this is okay. But once you get off this, you guys can go back and watch the recording. I did get on a little bit early at 1 hour. I didn't provide an update, so I apologize for that. You guys came in on time. I just went in a little bit early. Something had came up, so I didn't want to cancel. So I wanted to do this and get this recording out and get this done. So please go back and watch this recording. It's very good, some very good stuff and some very good information I went over in the beginning, talking about the key fundamental news that's coming out this week, specifically for CPI, and also for next week in regards to, not this week, but also for next week in regards to the bank rate, but 4 of the major currencies. Very, very key information at the beginning of this. This is really going to help you guys. As we saw some significant movements for the bearish movements on the dollar, that's going to have some significant moves coming up. This is going to be very critical for those who's watching the dollar. Take a look at what we're seeing from a dollar perspective. And we're seeing some bullish momentum on gold, BTC, and the indices market. Guys, watch this video. Please watch this in the beginning of the video. So I apologize if you guys are just coming in. I started a little bit early, but I did not want to cancel it. And I wanted to knock this out because I had something that came up that I had to leave about 3 o'clock. But I didn't want to cancel and cut it short. Okay, so I apologize for that, but you guys are going to definitely appreciate the recording. I'll have it out by 3 p.m. so you guys can go back and watch this, okay? Some very good stuff. Okay, so that's pound CAD. Let me go ahead and finish out the pound with 2 more pounds, pound odd and pound NCD. So we were hoping to see pound go up here. It didn't do that. It went down. Hoping to see pound come up here, right? This was low, this was medium, and this is a high probability of pound odd coming this high, coming this low. Now, I am more bullish on pound odd than I was last week, obviously, because it went down. If it comes down this low, you would definitely want to buy. Okay, if you have not gotten into the trade, you can put a pin and buy here and take a small trust here and put another pin and buy here. But all in all, I'm looking for a bounce for pound odd to come to this level of 1.73 and 1.81 if you are trading pound odd. Pound odd, in my opinion, across all the other pairs, is not in an edge setup, meaning there's other pairs, based on what I just went over, has a high and better quality setup versus pound odd. However, that does not mean you may not want to stay out of it. Doesn't mean that you don't want to trade it. It's just that if you had to choose between this pair and all the other pairs, you could wait on this one and wait to see what pound odd does from break of 1.7 or even 1.72 before you even consider getting into this trade. Or you can just place a pending buy here at 1.66 and another pending buy here at 1.61 to cost average into this trade. And you're going to see yourself a really good payout in pound odd. Or you can just come back to it and put an alert and wait for it to drop here and put a trade in. But I think you're going to be better off looking for other pairs other than pound odd, in my opinion. It was looking bearish. It looked bearish last week. It went even bearish this week. It could go a little bit lower. Pound odd. Odd could pick up some strength based on the fundamental news that's coming up this week, which is employment news for pound. I mean, not for the pound, but for the odd. Odd could push this down. I could see that happening. It could see it push down due to odd news with employment data, pushing it this week, pushing here. And it all depends on what happens with the CPI data on pound this week as well. So CPI data for pound, and we got some GDP news for pound. That could be possibly happening. And if anything, the pound bank rate news expected to be announced, not this week, but the next week, on the week of September 19th, we could be seeing at September 18th next week for major bank rate news. Sept, pound, US dollar, FOMC, right? US dollar bank rate, central bank news, and of course, JPY, bank rate news. Going to be very, very huge for those four currency. And like I said this earlier, and I'm gonna repeat this one more time. If JPY sneeze just a little bit of hawkish or any type of interest rate, it is going to shock the currency world on JPY, and you're going to see some extreme push down on JPY. And I would say, if you're erring on the caution of any type of sell stop on any of the JPY pairs, it may be a good time to do it for not this week, but the week after. And we'll take a closer look, depending on the development of this week, how JPY is going to play out. Okay, we're an extreme exhausting level on JPY. Okay, just as pound on, and to finish out with pound, let's look at pound NCD. You guys, this is the same markup from last week. As you can see, it went down, went up, went down, went up. We're in this range, but we are still in a what type of what type of setup we're looking at? What do you guys think? You guys be looking, we're looking at sell setups, or we're looking at buy setups. And if you're saying buy setups, you are right. So even if you put a pending buy here at 1.86 and put another one here at 1.82 and put an extreme, maybe a wishful, hopeful sell on NCD to push down to 1.78, I don't think so. Again, this is the same thing for pound odd. I think pound odd and pound NCD are not the greatest two pairs to trade right now. As you can see, we're in a really strong ranging market. However, if I was to trade this, obviously it's already going up. I do see this coming up. We will see this side of the range for pound NCD in the near future. But however, there is a little bit of potential downside at 1.86 and potentially 1.82 that it could come before we see that, or it could come here before we see that. Okay, so just be aware of that when you're putting it into your plan. Okay, so pound NCD, pound odd, what should I be looking for? Because NCD and odd have some news this week that could push the pair down a little bit. And then before we see the upside, or you can say, you know what, let me just put some alerts there on either my trading view or my MetaTrader 4 and come back later. I would not personally trade it. I see a lot more better quality setups on other pairs such as Euro USD, Pound USD, EJ and GJ, and way before I even see these two pairs. Okay. All right, let's go to the Euro side, which is the let's go to EuroCAD. Bullish EuroCAD, EuroCAD and PoundCAD. Guys, if you are buying or you're looking to be bullish on EuroCAD, PoundCAD, you are on the right side of the market and of the plan here. You can see this is historical monthly. This is extreme exhausting, right? Sealing the floor of the market. This is extreme exhaustion on EuroCAD. If you're looking to be bullish on EuroCAD, coming back to the daily, you are in good hands and you are playing on the right side of the market. It did dip. It did dip. I get it. And it push you down even a little bit if you bought here and it went down against you a little bit, and it probably even went down a little bit against you a little bit more. But if you're looking at it daily, this is looking like it could potentially make that move We were hoping up here, and look what we saw. When it broke this, it went down to this level, right? When it broke this structure of 1.34, look what it did. It went down here. Like if you had a buy here, then I would have put another buy here. I would have put another buy here. Those would have been the 3 buys that I would have put. This would have went against me. Just right here, I would probably be in the money, or I probably would have been able to take profit and reload it, okay? And it looked like it went even further, but it didn't go far enough to hit my pending buy here. And it looked like this went up. Like I said, I would have took profit maybe. Would probably been close, or I put a pending, a trailing stop. I would have got out and I would have reloaded for this one. This one would still have been under the water, right? So we would have been in 2 positions, this one and this one so far. This one didn't get triggered. But this one right here is looking to come back down, retest this, and come back up. However, could it do this? Yes, it could. What's the likelihood? Very low, but it could happen. You gotta remember, on historical, on a monthly higher time, we are bearish. Weekly, we are bearish. Market is way oversold, very sold, saturated at a key level. Very good key level. Look at here and here. You definitely want to be buying at this level, and put another pending buy here and pray to God it snags you, because you're looking to make some nice pips coming up to the upside. We will see this at a chart near you for 1,560 pips. It will come back to this level. And trust me, you do not want to come back 2-3 months later and go, damn, I just missed out on 1,500 pips. Euro CAD, pound CAD, pump and kick ass. Finally, right? Because I get it. This has been horrible downtrend since August 2020. I know, very long time. Sucks. If you wanted to trade it and be conservative, you can wait for this trend line break of this price right here, 1.36. That's another way to trade it. You can buy it now, or you can say, you know what, I'll forego 629 pips. I wouldn't, but if you want to, that's fine. And say, you know what, I'm just, my risk appetite is not there. I've been frustrated with this market this year, blah, blah, blah. And I just want to stay safe. That's fine. You can say, you know what, put a buy stop here, 136. And if it pulls back, don't be alarmed. It could pull back against you and then hopefully go back here. Okay, just be aware of that. Okay, that's your CAD. Let's look at your odd. Okay. Your odd is a lot more better setup if I had a choice between your odd and pound odd, okay? Now, there's a couple of things here you gotta be aware of if you wanna trade your odd. These are the things that you wanna look for. Let's look at the monthly first. Okay, first thing you wanna be aware of, we did see this break, okay? This is on the monthly. This was back in October 21. So we did see this break. And we see this touching and retesting these lows, right? So if you were to put a zone there, this would be the zone. This is where I have the 2 levels of where you would want to strongly consider putting buy. In fact, I even go as low as this one, and this one. So 3 levels. Let's dive in on a daily time frame to talk about what 3 levels I would be referring to. Okay, the first level would be 1.42. If you were to put a buy here at 1.42, let me zoom in. If you were to put a bend, maybe you would have put 4 levels. Let's go 4 levels. And I know I talked about this last week, but let's put 4 levels. Let's put this level here. Let's say, for instance, you put a buy here. Let's say 1.46. Say you did that. You'll be underwater. The next one would be here. This would be 1.42. Why would you put that? Because it was swing level here. That was a swing low, and that was 1.43. So you would put a pending buy around there, 1.43, 1.42. Now the next 2 more pending buys that I would have put would be this target, 1.41. You can do that now. You can put another pending buy right here. This would be, this would push you down into some extreme level of drawdown, maybe as much as 5% just on this pair alone, if it goes down to this far, 1.37. But if you would have put it by here, or say you would have put it by here, and we talked about this, I think we talked about this last month, that we would want to look for a break or a bounce up here. And I'm extreme thinking about this would be a break, but if it could come down, it could come down to this low. If you would have followed this and said, you know what, I'm gonna go ahead and buy here and put a pin in buy here, you vastly would have been in the money. 610 pips just off of this, and you would have been up in the money 217 pips. That's almost 900 pips on just two trades. Would you have gone into a drawdown from here to here? Yeah, but we are a mean reversion. We knowing that we're seeing some extreme exhaustion here. And we know on a higher time frame, we're seeing historical lows. You would have got down near 900 pips. You would have been out of the trade, just playing on two position, okay? Praying that it hits you here and ultimately praying that you get you here, because if you would have got here and when it went up that high, you would have been 1,100 pips on that one. You would have been up another 786 pips on that one. You would have been up another 600 pips on that one. You would have been up, you know, 220 pips on here. Yeah, that drawdown would have been a little bit kind of nervous, but you didn't plan for that. That's what the market did. You know, you didn't plan, you didn't wish for that. You planned for it, you didn't wish for it, what I mean. But you would have been killed, made money. Not even just these two positions, you wouldn't have been in drawdown here. This would snag the buy stop, boom, went up, you would have been great. This one, you would have been in the money, you would have closed both of them out, you would have done what you were on. Okay, so what do we do now since it's back here at this level here of 1.49? What I would do is put a pin in buy here, reload 1.42, and then put another one here at 1.40. Okay, you're on, I'm bullish for you're on. Your NCD. Look at this one. Oh, this would have been a nice trade. Oh my gosh. Okay, same thing from, you know, euro odd and pound odd, right? They're kind of correlated. You guys can see this back in July. No, this is January now. January, here, July, August, yep, August, July, it went up, January 22, and then we're seeing a bullish run down to the downside. However, this is historical low, this is historical high, okay? So yeah, we're pushing down to some key demand area as on the monthly. And I gotta wrap this up since I gotta get ready to take my wife somewhere. I gotta wrap this call up. So I'm glad I got this out the way. So let me see. So let's go down to the weekly. So we are here, right? Now get this, when price was playing around this level, I would have definitely, and I know I possibly, if I go back to my recording, say we should be looking to buy, price hit 1.57. If you would have put a pin in buy there, you would have been up 665 pips, right? But let's go even further. Let's say hypothetically, you did that when we talked about it here. Okay, this is for just a little bit of coaching. Now, let's say you would have put a pin in buy here, right here at this level. Why would you put it at that level? Because it was there already. You would have put a pin in buy there, and you were saying, you know what, it could possibly look for a break at that level. If it breaks here, it's going to come down to this level here at 1.6. And you're going to put another pin in buy, let's say, at this key level order block, let's say, you can just play anywhere in this area, just anywhere, this demand area of 1.55. Okay, and you didn't put a buy here. You could have put a test buy if you wanted to, small lot, and then put like maybe a 0.02, 0.05, and another 0.02, 0.05 here if you wanted to, depending on the account size, depending on if you know how to trade or strategy. So let's play this. whoa, what just happened? It broke that. It took your trade. If you went into a pen and buy here or buy test, it went into a drawdown. It figured that, sucks. It took this, sucks. And you'll be sitting here saying, man, we're an awful trader. We're awful traders by having 3 trades going in drawdown instead of stop loss and going boo-hoo, take the loss, lick our wounds, and go the other way. Okay, well, that's if you trade, that's fine. But if you want to trade with the big boys, you want to trade with the institutional trading, knowing this is how things happen, right? Because we never know exactly what's going to happen. It messing with you. It did go up. Now, if you wanted to close that trade when it went up, which we do trade up. If you got tagged here, your TP would have been here. This one TP would have been here. You would have been out of that trade. But let's say you held on and fell asleep at the wheel. Okay, frustrating. 1, 2, 3, 4, 5. Whole week sucks, don't it? That's okay. Look here, reload it. Just say if you missed that one, it's this one's in the money. This one's not in the money. This one's out of the money. What just happened, guys? Profit. Here, look at this real quick. Put in your calculator. 1,349 pips. I know it sucks, right? You have to go to drawdown to do that. Sure, if you want to trade this way. Another 716 pips. I'm up 2,000 pips, guys. What do you think? And this one, close out, another 238 pips. You are now up 2,303 pips. Took a couple of weeks, maybe some frustrating, maybe some drawdown, but because we understand we're in extreme low side of the market conditions, and this is what we're looking from a bullish standpoint, we should be going bullish. I would say I take that trade any day long. All of our traders know you take TP here. What do we do here? We reload. What do we do here? We reload. Look at you reload here. You reload here. TP is here and break even. You would have made some more money again. 505 pips here. Here's what you want to do. If you miss this opportunity, you guys ready? Put a pin and buy here. 1.611 pin and buy. Do a small one and do another one here. 1.555. In fact, let me go a little bit higher since it touched this twice. 1.56. Put a pin and buy here. Put a pin and buy here. Your TP for this position will be 1.66. Your TP for this one would be 1.61, right? The same one for this buy. Do that on a demo. If you haven't traded before, if you traded on live, my coaching students know, go for it, take it. Get that money, guys. All right, so the other pairs, I'm not even gonna go over it, doesn't make any sense. I think my time is up. I again, apologize if I started this a little bit early, guys. I did start it at 1 o'clock instead of 2 o'clock. I didn't have enough time to update you guys. Thank you guys for catching the second half. However, when I get this recording up, please watch the first half of this recording. There's some really good setups here that I called out. There's some key information from a fundamental standpoint that I called out. And then other than that, I think you guys have some really good setups to trade for the week. Again, follow this on demo, follow this on your chart, or follow this on your live, or adjust your trading plan to get these pips, guys. This is the last month of the third quarter, and then we have 3 more months, and then we're going to US midterm election type of deal. There was some key fundamental news. We got the interest rate. If CPI data comes out this week, which I'm expecting, as you guys are going to hear at the beginning of this recording, if we see CPI data come flat or worse, the dollar is going to fall. US 30 indices, gold, BTC will continue to fly up, as we saw at the tail end of this week. Okay, watch that recording. If you guys want to see that, see what I saw in the technical, let me explain that further on what I see from the bank rate and the probability. Look at that in the first half of the recording. You guys are going to enjoy that. Other than that, you guys have a great week. I gotta go. I'll get this recording up within the next 30 minutes. You guys should get a notification. Other than that, have a great day, guys, and we'll get to you guys next week and get together and let's do live trading. Look for information on that. I'll be shooting that in the community probably later on today, if not Monday, for Tuesday, Wednesday, and Thursday. Okay. Other than that, guys, awesome. Great session, great analysis. I think you guys can appreciate that. Let's have a good week. I got 4.7% return last week. Took a lot of opportunity on gold, and guess what? I'm gonna bank it again. I'm gonna go after gold this week and see if I can do another 4 to 5% and get some more consistency. So great job on those who stuck around on the trade management and have their accounts on active and not disabled. Not sure why for somebody to do that, but if you enjoyed your 4.7% return, let's get some more trading into the account. That was a great return for a week. 4.7, be good if we can get that in a month, but I did it in a week. I'm looking to do that again and continue to get back in. I'm back in full time, back from vacation, and focused, ready to go. I'm ready to get some more consistency on our belt. Okay, guys, have a great day. See you guys later.